Hello everyone out there, this is Alexander F. Onileri from Caliban Crypto, and I'm just doing my take on the FOMC thing.
Good afternoon.
It's a week late, or maybe 4 days late, but what's a few days between friends? 9 weeks into the topsy-turvy administration of Donald Trump.
President Trump recently called for the Fed to lower interest rates.
I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world.
Jerome Powell had a FOMC meeting and announced the latest stance on U.S. economy.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet.
The Fed, or the Federal Reserve System, is a private central bank of the USA created in 1913.
So let's start with why the Fed was created in the first place. In the early 1900s, bank runs were pretty common. If a bank, a private business, went out of business, that meant everyone lost their deposits. Fearful, people would run to their healthy bank to withdraw their money. Only banks didn't keep that much cash handy, so they'd fail, causing more people to fearfully run to their bank. After a large run in 1907, wealthy bankers like J.P. Morgan put up their own money to essentially bail them out.
After that panic in 1907, business and political leaders got together and said maybe this isn't the best way to run a modern economy, to rely on a few wealthy individuals doing the right thing in a time of crisis.
In 1913, the Federal Reserve was created to be the United States central banking system, basically a bank for banks. Then, the Great Depression hit. It's widely agreed by historians that the Federal Reserve Bank's inaction and them keeping the circulation of money and lending too tight made the Depression worse. And by widely agreed, nearly a century later, a Fed governor said, "We did it."
Nowadays, its job is or was to regulate and stabilize prices, maximize employment, monitor the U.S. money supply, and the interest rates. It controls the interest rates by doing this. When the economy is slowing down, it lowers the interest rates. This makes money cheaper to borrow for banks and in turn to their customers, you and me. And this encourages people in the economy to spend. On the other hand, when the economy is overheating or overheated, the Fed hikes up the interest rates. And this is interest rate the banks use to borrow money between each other. They pass it on to the customers, and it makes it difficult to borrow money. Therefore, it makes it difficult for customers to spend money. So they try to save and they don't borrow too much. This is one of the things the Fed does. Controlling the money supply, on the other hand, is done by quantitative easing or money printing, as we say in crypto. Quantitative easing, or QE, is performed by the Fed buying treasury bonds from the banks. They buy this by putting some dots end of some computers. I think 11 computers, according to Elon Musk.
So I call it magic money computer, any computer which can just make money out of thin air. That's magic money. It just issues payments. They just send money out of nothing.
And they use this to buy treasuries from the banks. This puts money, magic money, into the system. And this is one of the things we're waiting for in crypto. On the other hand, when they want to reduce the money supply and take inflation down, they do something called quantitative tightening, which is draining liquidity by reducing the money supply. They do this by selling US treasuries and getting cash out of the banks. They take money out of the banks and money out of the US system. I mean, other nations also buy these treasuries, I believe. That's a brief history of what the Feds do. Now back to the FOMC meeting. Jerome Powell was walking a tightrope between quantitative tightening, QT, and quantitative easing. He didn't announce the end of quantitative tightening as we wanted, but he didn't say we're going to quantitative easing either. And he skated around the effect of Trump's tariff on the economy and the inflation, saying it's too early to say what's affected by the tariffs and what's not affected by a tariff. I mean, you can see that in this clip.
I do think with the arrival of the tariff inflation, further progress may be delayed. The S&P doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27. Of course, highly uncertain. So really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out.
Jerome Powell there. So what are the takeaways from this FOMC meeting? 1, the economy is strong. Interest rates will be holding steady at 4.5%. Unemployment is at its natural level. What does that mean? When I was growing up, I always thought you don't want anyone employed. But apparently, once you go into the macro system, you need a certain amount of unemployed people. The Fed is going to slow the pace of quantitative tightening in April. So what's that? Like 2 weeks from now? The Fed will be reducing the US Treasury cap redemption from 25 billion to 5 billion. We can expect 2 more rate cuts in 2025. But the Fed is going to wait to see the impact of Donald Trump's tariffs before they react. And they expect inflation to fall to about 2% in 2026 and 2027. And that's it in a nutshell. Chase.com reckons this meeting shows the importance of reviewing our investments and ensuring that your portfolio is diverse. But how are crypto bros like you and me going to diverse our portfolio? It's crypto or nothing. I mean, some people mess around with gold. And is NFTs diversity? The other thing I picked up from this is that Jerome Powell is standing down in May the 15th. What does this mean to the Fed? Does that mean we're going to get someone similar to this position? Or are we going to get one of Trump's stooges? Because people are feeling that Donald Trump wants to destroy or sidestep the Fed. Would it sidestep the Fed? People such as Ron Paul, I think is a senator from Texas, he definitely thinks so.
The time has come. Let's end the Fed.
And why would they want to put an end to the Fed? Some, like Dr. Judy Shelton, say that the Fed is unelected, opaque. It pays banks not to make loans. It's become the lender of the last resort. It deals in currency manipulation. It keeps trillions in its own portfolio and has no limits to how much money it can print.
The Fed is primarily still a bank for banks, but it has also become the stopgap for most other parts of the financial system. They can make decisions quickly and without political fallout.
To the extent you have a handful of unelected people making huge decisions about the economy, it's something that Congress and the White House, our elected leaders, have really decided to really outsource this to the Fed.
Basically, it's easier for the parents to rely on the chaperone.
In a podcast titled, Will the Fed Be Abolished under Trump? The former economic advisor to the president, Dr. Judy Shelton, said in a recent interview with David Lin of TDLR this.
So that begs the question, why have a central authority or central bank at all? Let's just take the other extreme. Why not have no central bank whatsoever and no authority targeting inflation or growth or employment, and just leave everything to the free markets?
I think that is the question of the moment. In this past week, we've had Elon Musk endorsing the idea that Chairman Powell at the Federal Reserve should be replaced by Ron Paul.
Ron Paul, of course, the guy who said this earlier on.
The time has come. Let's end the Fed.
Ron Paul, of course, the former U.S. representative from Texas, famously wrote a book in 2009 called End the Fed. And now Elon Musk, who is pushing the idea of auditing a number of government agencies across the board, has supported the idea of starting by putting Ron Paul in a position to audit the Fed.
There you have Dr. Judy Shelton laying into the Fed. Politicians are now saying enough is enough. The Fed who held us through the 2008-2009 financial crisis, the Fed who led us through COVID, they need to be audited. And this is echoed by Dr. Judy Shelton.
People like Senator Mike Lee saying that the Fed has gone beyond its constitutionally intended powers. Basically, Congress farmed out its own responsibility from Article 1, Section 8 to regulate the money to this government agency whose record on delivering stable money has not been very impressive.
And here's Senator Mike Lee attacking the Fed.
The Federal Reserve Bank is a private entity, and I do support Senator Rand Paul's bill to audit the Federal Reserve Bank. It's important to remember that the Federal Reserve Bank, while a private entity, has also been given these broad regulatory powers and, in fact, broad policy-making powers. It's unusual. It's extraordinary, really.
Senator Mike Lee there. There is a suggestion that we return to the gold standards, or at least Bretton Woods. This gets my crypto blood tingling, because if they are doing a modern style of this Bretton Woods thing, I'm thinking digital gold, Bitcoin, anyone?
You've been an advocate of a return to the gold standard. Could a return to the gold standard like Bretton Woods be or act as such a constraint, like you referenced?
I would not go back to any prior system, but I would take the lessons from both the classical international gold standard from 1880 to 1914, and also the 30-year era of the Bretton Woods International Monetary System, which was a gold exchange standard, something different than a gold standard. And that from 1944 to 1973 delivered decreasing inequality of wealth, fantastic productivity, broader workforce participation, and in general delivered an economic boom, not just for the United States, but around the world. It was very powerful. That is really the only appropriate foundation consistent with the principles of free trade.
Again, Dr. Judy Shelton there suggesting a return to the gold standard. This is Crypto Casey's take on the future of the Fed.
Trump is honing in on gold reserves, keen on auditing to confirm inventory that hasn't been audited in over 50 years. That should be interesting. And Trump has announced the creation of a U.S. sovereign wealth fund, strategic Bitcoin reserve, and separate cryptocurrency reserve. So why does Trump want to focus on building asset reserves? To convert our debt-based fiat currency system back to an equity-based one like it was when the US was on the gold standard. So instead of just borrowing money at interest from a scam bank, the Federal Reserve, we can borrow against equity we have in our assets at a much lower interest rate.
So should the Fed be abolished or reconfigured in the image of MAGA? I'll be interested in hearing what you think about this. So please subscribe and like this video and let me know what you think. This is Alexander F. Onileri from Kellybone Crypto saying I'll see you next time.